involved as well. N Jayakumar is Group CEO and Managing Director at Prime Securities. Jake, it's great to have you on the program. Thanks very much. You know, this tariff bit, I know you want to spend some time on pharma, and we will come to that in just a bit, right? But broad thoughts. You heard Parikshit. The takeaway in that sense is that don't expect, I mean, I would read that to say that don't expect any big breakthroughs in the next 6-7 days, right? I mean, we are firm from our side, and of course, I mean, the 25% plus, whatever that plus is, has been announced. What is your sense? How should investors read what happens from here, near to medium term, Jakes?
Well, I think, to my mind, the opening salvo has been fired at 25%. The idea is to buy more stuff from the US. I think what's riling them is the fact that we continue to do our own purchases from various parts of the world, as indeed we should if we are required to be energy sufficient and energy independent. Now, from our perspective, buying oil from anywhere can happen, which is what, if you heard Parikshit, the government sources seem to have referred to the fact that they'll be open to buying more oil, and therefore, for whatever this is worth, this obsession with the trade deficit, that can be actually cut down if you buy more oil from the US on oil and oil petroleum products. And my own feeling is that anything that will happen now will be marked with this particular thing, that which will be seen as a big win for the US, that they are able to sell far more petroleum products to us, far more oil to us. And I think that's going to be an important element in bringing down this optical trade deficit. My own assessment is that, or this is my guess, and obviously there's no information, that we'll probably settle at the 18-20% range as far as India is concerned. And some of the specific sectors that are eliminated, like pharma, etc., will continue to enjoy a zero to no tariff kind of thing because of the fact that we are the lowest cost suppliers of products into the US. This is my broad take, and I do believe that the very fact that overtures are being made about a deal will happen. I think they needed to, in a sense, poke this process forward, and that's why this 25% number was given. Nothing more than that. It's just usual trumpery which is happening, and I don't think we should read much more into this. There's no sanctity about this number.
Fair enough. Now let's come to pharma, where you have some specific thoughts as well. Is the market, first of all, overreacting? The pharma index is down 3.5%. The fear is there is the sectoral tariff, plus there is an indirect impact if these, the innovator companies like Pfizer, Novartis, Eli, etc., are asked to cut prices, and then the fear is they will pressure Indian companies who may be supplying to them. So there is two-way impact in that sense, which is being presumed, I guess. But what's your sense, Jakes?
I think it's complete overreaction. Markets have generally been skittish. Any news on any sector, they tend to react with both their hands and both their feet, as it were. I personally believe it's a huge overreaction. If anything, generics are a boon into the US, a boon for the US. And just to sort of explain this, Trump's issues are with the cost of patented products. His issues are with big pharma. The only big pharma in the Indian context that you can think of, in that sense, having its own, I mean, there are very few companies, but Sun Pharma is the only one that sort of jumps to mind, and that too, a small percentage of their portfolio. Other than that, I'll give you an example of, let's say, a pricing that happens in the pharma space. If the generics equivalent lands on US shores at $1, given the fact that most companies here, and assuming all their margins come from the US, they operate between 20 and 25% EBITDA margins, 30% if you want to be extremely charitable. So technically, the $1 gets marked up to about $1.40 when they distribute, when they sell it to the distributor chain. That's all the markup that the Indian pharma companies enjoy. One going to $1.40, and all of the costs are to their account. From 140, the problem begins actually at that point, because three distributors, these are not names that are known. They are equivalent of the CVS chain, equivalent to the Boots chain in the UK. Three such chains account for 90% of the distribution. This is a point that's been actually on Twitter. There's been an exchange, even as much as, Elon Musk talked about it, the Doge talked about it, and I kind of contributed to the discussions to an extent, if you will. that actually the problem child, if you will, is the distributor in the middle. Because the distributor marks up this $1.40 to as much as $4, maybe even $4.50, justifying this on the grounds that the patented equivalent is at $10 or $12. So the markups for somebody who produces a drug is $1 go to $1.40. And for the intermediary, which is the three distributors and then the pharmacies that come into play, and they probably split that difference 80-20 in favor of the distributor, that $1.40 becomes $3.50 to $4.50. And that is where the problem lies. This is cartel for want of a better word, because 90% distribution goes through them. And there's enough evidence if you go back in time and do your research on the Doge savings to American consumers is concerned. That particular aspect did have a fair amount of exchange between various people. It's about 6-8 months ago when Elon Musk was still the blue-eyed boy of the administration, if you will. And he talked about how it's important to eliminate the margins here and actually convert this distribution into some kind of a utility, which actually can make way for substantially lower costs. And let me tell you that the lower cost is only happening because generics are coming in at that price. So you can't go after generics and tell them to hike up prices through tariffs, when actually you should, at one level, be eliminating the distributor margins. As far as the big pharma is concerned, some may have a target that they must recover their investment in R&D in 2 years. Somebody may say 3 years. And therefore, the pricing is as egregious as it is. But other than that, there is nothing to say that pharma, especially the generic space, is going to have problems of absorbing a 25% tariff hike. I don't believe that at all. In any case, most other suppliers in the world, Chinese being our biggest, are at a higher level of tariffs. So at best, you can look at the differential. And I don't believe that pharma is going to be put in the same basket in any case.
That's very well explained, Jakes. The only thing is that obviously the US government, etc., everybody know. So your point is, even if tariffs were to go up, it won't make that much of a difference. I mean, the companies will be able to absorb it. And if they go up, it'll be wrongly so. But given that all this, they also know all this information, right? The people who will decide, hopefully, who knows. But as I think I remember speaking with the Lupin's management, and they said that the cost of making in the US is about 8 times the cost of making in India.
That's a separate issue, by the way, which is why I believe manufacturing going to the US...
That's not going to happen. That's not going to happen at scale in any case.
Will not happen.
But what you are saying is that even at that one becoming $1.30, $1.30 or $1.40, that is, they could be, that margin can compress, or you're saying it won't happen?
I don't think there's any reason to. If that $1.40 became $1.60, all that the distributor is doing is earning not $2 for this, but maybe $1.80. I'm saying there may be some degree of this thing there, but most of the margin will get passed on. There's no question about that. Because the problem child in this is not, I repeat, not the generics guys. They are the folks who, in fact, who haven't as yet gone ahead and, drastically raised prices in order to make up the difference between the patented and the generic. That's not happening in any case. And usually the rule of thumb is if it lands at $1, the generics price, the patented equivalent is usually, 7 to 8 times that. So at 140 into 7 times, about $10. The problem is that the margins of intermediaries are just too high in the US. Now, they may justify it on various counts and, in terms of, the cartelization that happens, but that's the reality.
Yeah. So what should investors do? You said it's a huge overreaction. Buy some of these names?
I think so.
Which ones, Jakes, in particular, you think?
No, I don't want to get to the name, but generics heavy. And to the extent that one or two of these names have some facilities in the US, the US facilities may get, from a finishing part of it, may get additional business now. And you may have a higher utilization of the US facilities as a result of this. But other than that, I think there's marginal tinkering at best. Ultimately, I do not believe either tariffs to the pharma sector. In any case, they've indicated that even if they were to come through, would be 12 to 18 months down the line, which is what he himself has said. Of course, there's no sanctity for the fact that he said something and he can't go back on that. But more importantly, the fact that he has only written to the patented folks to bring down their prices, because those are extremely high in the context of an individual's wallet, or even if a portion of that was to come through insurance. But I repeat, none of this conversation so far has meant anything to do with generics. So the reaction from that perspective, based on what has been spoken about, I think it's a huge overreaction.
Okay. All right. Take that point on board. Thank you for joining in, Jake's. Good conversation. Good listening into you today. Thanks for being with us. Have a good weekend. Before we move on to all the buzzers that Hormaz has pointed out for us, just take a look at US futures as well.